Mike Jesowshek. Yes, I can say the name. That's right. I can pronounce his last name now because I practiced, and he helped, and
That's
then I
great.
think Google helped.
Great.
Welcome back to the show. We're so excited to have you, a repeat guest and one that we cannot wait to hear from because you're going to chat with us about our favorite topic, Matt's favorite topic, how to dance around. But no, I love chatting taxes. It is to me one of the most creative spaces without, paint and paper and pencils because everyone's situation is totally different. And so I
Mhm.
find it to be really creative. So that is not sarcastic, folks, when I say I'm excited to welcome Mike Jesowshek to the show.
Hey,
Nicole,
Mike.
Matt, thanks for
Yeah,
having
well-
me. And that excites me. I really like coming on because it is creative. And so many people are like, I don't want to deal with tax. I don't want to look into tax. I just want someone else to do it. And my theory is always like, you got to understand at least the basics. Like hiring an expert's good, but you need to at least understand the basics because it's so key because everything that you're doing on a daily basis as a business owner can affect your taxes. And so it's like that idea of every time you swipe your credit card, like that's affecting your taxes in some sort of way. And having some of that base knowledge can just really spring up. So it's exciting to hear people, especially in the creative space, that want to learn about tax.
Yes.
Oh my gosh. Yeah, totally. Now, I am married to a financial analyst, so our house tends to skew marketing, data, numbers. We tend to already hang out there, that's for sure, instead of burying our heads, in the sand. Sometimes you want to, especially when I'm swimming in everybody's data. I think it just gives control back to a small business owner who might feel like they don't have any. And I don't think that that's what the messages are out there. There's complacency messages like there's only one thing for sure in life and it's death and taxes. And that just sounds awful.
Yes, it does.
And then there's like Matt, who, always wants to make sure he knows, like, what does he need to know?
Yeah.
Because there's always some client coming to him asking something crazy.
Well, it's a hard spot to dance around even as a practitioner myself. I just had a call this morning, in fact, and they're asking very specific tax questions. And I have to say, listen, I'm not a CPA. I cannot give you tax advice. I can talk about tax law broadly, but to get really creative, what you need is have good open dialogue and communication between myself and your CPA. Form that team. That way you understand how we can better dance those gray areas, how we can better create the long-term business strategy and planning. And it's a matter of having that team and having open communication between both the parties.
By the time it gets to you, it always feels heavy, serious.
Yeah, when it gets to me, it usually is pretty serious, but still.
Well, I was wondering, Matt, what can my excuse be if I don't know the answer? Like, I am a CPA, so that was my excuse. I can say I do the attorney route. It's so funny, though, because people will seek advice from different people. They might go to their attorney for tax advice. They might go to their financial advisor for tax advice. They might go to their accountant for tax advice. And the problem is that we're all getting this information in a different context.
Yep.
Like the way Matt is an attorney that you look at tax is different than the way I look at tax. And the way a financial advisor looks at tax is different than both of us look at tax. And so I always say it's so important to not talk to those individuals in silos, but bring them in the table, or at least have the professionals talk and then come to you. Because we get so many clients that, the accountant says do a solo 401k, the financial advisor says do a SEP IRA or whatever it is.
Right.
And now the client has to be like, well, who do I trust more in this scenario? Or who do I have a better relationship with? Where at the end of the day, me and the financial advisor might talk and be like, okay, I get your point here, you get my point here, but I know this about the client that maybe you don't know, or whatever it might be. And so it's just important to kind of bring that context together with kind of all the professionals in your kind of tool belt.
Case in point, Mike, I'll say this. I have a client that's doing some asset protection. And when you come to me for asset protection, you're asking about very specific questions on liabilities and layering and legal defenses and how do I protect myself and protect my legacy, my family. Some of the answers you're going to solicit from me are not going to be the answers you're going to get from your CPA. Because some of the things I'm going to start to tell you are going to create more complicated tax planning, complicated
paperwork,
tax returns, paperwork, more EINs, more businesses, you name it. I said, you need to make sure you understand the tax implications for each one of those. Talk to your CPA, get the advice and counsel. They came back to me and said, well, talk to my CPA. And they said, all these will be complicated. Don't do any of them. And I'm like, then basically you're paying me for nothing. You know what I mean? Because you came to me on asset protection, which in turn is going to have some ramifications. And it's not going to be easy. But it goes back to those silos you were talking about, Mike. There's just no communication.
One thing about that, Matt, is you told the client one thing, then the client took what they thought they heard from you and told the accountant. And is that necessarily the same conversation that you would have had directly with the accountant? Right. And I think as professionals, I mean, I get this all the time. People sharing like, oh, I heard this. Can I go and do this? And Most of the time, whenever I hear someone say like, I've heard this, it's probably
Mhm.
like a crazy TikTok video or something. And it's really good information on TikTok. So I'm not saying that,
Right,
but
right.
Right,
it's
right.
something usually kind of crazy. So I think you just avoid some of that lost in translation if you just
Mhm.
connect them to begin with
Right.
and then come to the client with the solution. Because after talking to that accountant directly, Matt, they probably would have been like, okay, I get where you're coming from. There is some added complexity, but it makes sense from a legal standpoint. Going to cost a little bit more as long as the client's fine with the extra tax return, whatever.
Exactly.
Like,
Exactly.
Mhm.
let's move forward with it.
Right.
But they don't
Right.
have that full context of your conversation with them.
Right. Right.
So let's talk about last year and this year in your business. And then just, of course, some good old what to do, wins, watch outs, lookouts for the year ahead as well. Matt, you had a couple of 2022 questions.
Yep.
And then we're going to chat about 2023.
So without getting too specific on a specific client, what was one of the biggest bonehead moves you saw from 2022 that a client did?
Yeah, boy, that's a really good question. And this is kind of just in general. It's that week between Christmas and New Year's, we just get bombarded. And everyone's like, no one's working that week. And a lot of people aren't. It's usually very calm. And then all of a sudden there's just one day and it's like a fire alarm going off where there's a client that needs to talk to us on the 29th of December. And it's this idea of so many people, no matter how much we talk about tax planning, tax planning, tax planning, tax planning needs to be done throughout the year. Tax planning, once 1231 hits, 95% of tax strategies go out the door. No matter how much we talk about that,
Mhm.
it always seems that people are waiting till the last minute to do it again. And so when I talk about like bonehead mistakes, it's that type of stuff. We have people hitting us up now saying, hey, I'm kind of nervous about my tax liability. Like, well, we've been talking about this since September about things that we can be doing and setting up a meeting and doing all these different things.
Sure.
And now, once the year's over, now it's just top of mind because now we're entering that tax season. It's just that procrastination in general that human beings have.
Okay. So was there any good stories of like, hey, you know what? This tax piece, this legislation came out, something came out that's like a good move as we move ahead in 2023 that happened in 2022? Anything that's a good win?
Yeah, so I think from a tax legislative standpoint, they have kind of the Secure Act 2.0. And if you notice, there was this bill in December that kept getting pushed back and then voting on and then coming back at it. And I think it was right before Christmas, like the
Mhm.
23rd or something like that, where it finally got passed. I'll just say this, there's a lot of different things in there that affect taxes in many different places, but some of the good things that came from that was part of the Secure Act 2.0. And I haven't had time to dive through that completely myself, but what that does is it's a lot of on the retirement side. So 401k plans and how it makes those advantages to the business owner. So that was really big. And I think just in general, if we look at some of the retirement plan outside of that act, but if we look at where rates have increased going into 2023 because of inflation and the natural adjustments that the IRS makes, your ability to put money away towards retirement is the highest it's ever been. And it's one of the highest increases that we've ever seen as far as like an annual limit to that. And so
Mm.
I think when we look at that, if you're someone that's like, yeah, I want to save for retirement, or think of this idea of his retirement savings as a great opportunity for tax planning,
Mhm.
that opens up the door a lot this year. Now, I will
Awesome.
caveat that when we talk about retirement planning, one thing I always say is retirement planning is great. And I think you definitely want to be thinking about that as a business owner because so many business owners think that their retirement plan is selling their business. And I've seen far too often that time comes and no one really wants their business. Or,
Yep.
some
Mhm.
people self-regret and they walk away very well. But
Yeah.
one thing about retirement planning is sure, there's opportunities to save taxes today. But really, with retirement planning, you're just pushing the can down the road for the majority of plans. If you're getting a deduction today, that means that sometime down the road, you're going to be paying taxes on it when you access those funds. So I just want to put that in mind is like, sure, you might have saved $30,000 in taxes by funding a retirement account to a certain level, but just be aware that that's not tax savings that are gone forever. Nothing against retirement planning. We do it with all of our clients, highly recommended. It's just a point that I like to point out there because there's a lot of tax strategies that if you see tax savings today, that's permanent tax savings. Like you will never pay taxes on that money again, where retirement planning is more of a future tax liability.
Let's talk about your 2022 for a minute. So it's been almost a year, right? So I know you had some things on the horizon for yourself and your business. So tell us what happened last year. How did it go?
Yeah, so we've been doing our podcast for about 5 years now. But one thing more recently is just taking it more seriously, being able to devote more of my time to this. And really, my passion is to help business owners understand what tax strategies are available to them. And then how do you implement that? So the whole idea behind this podcast was so many people have this inner thought, or they reach out to their accountant and they can't get straight answers. They always get well, can I hire my kids in my business? It depends. And the accountant's not giving them any direction. And so my goal with the podcast was to be able to answer those questions. Sure, it depends. Everything depends. Matt, as an attorney, you know that every situation depends. But for 80 to 90% of the strategy, it doesn't depend. It's the same, whatever your situation is, and then you need to tweak it here or there to make it fit you perfectly. And so my goal with the podcast is saying, how can we get most of the way there and say, okay, we know it depends, we know everything else, but here's the strategy. Now take it to your accountant and go figure out, okay, what do I need to tweak it to make it specific to me? So that's really been my passion. And that's allowed me within the past year, have really been able to focus time on, the content creation, helping business owners out in this space, creating training and doing different things. So we've done a lot of different shifts. Last year, we held a summit, which is a 2-day live event where we deep dove into tons of tax strategies. That was my first time doing a summit that mainly it was just me. I had one guest on there to talk about the retirement side, but it was a solo one. And I got done with the first day and I'm like, I don't know if I'm going to be able to talk tomorrow. I think it was like a 7-hour day and just me talking. I'm like, man, I didn't realize the impact they would have on me. And the podcast has just continued to reach more listeners. And as part of that reach and trying to get in front of more business owners with some of the training that we're doing, we launched a few different things. So we've gotten deeper into YouTube. So we have what we call Tax Savings TV, which really is just taking a lot of our same content and just putting it in more of a video format. We started that near the end of the year, which has been fun. And what I've learned is everybody learns differently. And so with our content, we started out as a strictly audio. That's it.
Yeah.
And then we started saying, okay, like some people like to read. So let's get into a blog post where we basically take whatever's on the podcast is now a blog post. Yeah. And then we're like, well, some people might want to watch and learn and see the personality around what they're learning. And so then we started now this YouTube channel where we're basically taking same piece of content, that same podcast episode we're doing, but now in a video format, in an audio format, letter format, if you want to read it. And so giving an opportunity, whatever you like to learn, however you like to find this information, giving opportunities for that.
I'm so happy to hear it because 65% of learners, so that's all of us, are visual learners. And even though you pointed out so perfectly, it might not be a different thing that you just same content. We do the same thing with this show on YouTube, that there's the personality, right? Like somebody can be like, I got to hear what Mike has to say about this, or I'm going to tune in and find out what he has to say. And let's face it, the accounting world, you guys don't show off personality too much. So it's really nice that you're representing, you're out there and you have a lot of it to share. So I'm excited that people can consume it in all the ways. That's great. So let's jump into 2023. What do we need to be doing, Mike? We didn't do it last year. We didn't listen to you. We didn't do the thing. What are the things that you're telling your clients and anybody else that'll listen? This is the year. You've got to get this right.
Yeah. So there's two pieces that I think that come to play in this as being a business owner that's going to really set you up for success from an accounting and tax standpoint. The first one is bookkeeping. Now, bookkeeping doesn't per se save you taxes, but you'd be surprised how much it actually does save taxes by being proactive in that area. So it's kind of a less sexy idea, this idea of bookkeeping, but something that I think is so important for business owners to just get on top of. Because it helps you in so many different ways than just taxes, than just making tax season easy. Like this is your backbone to your business. It's kind of this instruction manual or roadmap to how is your business doing? And also like based on that, what are we doing differently as we go forward? I know people, when they get really overwhelmed, if they start thinking about bookkeeping in August, they're like, I got 8 months of bookkeeping to do.
Right.
I'm going to make this a January project when it just has to be done at that point in time. And not only is it going to make tax season super easy next year for you, but it's also going to help you in so many different ways as you're running your
marketing
business this year.
comes to mind, profitability,
Absolutely.
spend. Okay, so Mike, good point. Well, those are one of those like cerebrally, we know it. We don't want to do it. You said it. Hey, it's not the sexiest thing ever. Like we don't want to do it. So tell me that you have like your favorite accounting tools that you love or that you're seeing that are helping the busy business owner make it easy on themselves. Or, maybe one of the tools is hiring some help.
What people think is bookkeeping might be a lot easier than what they imagine, or doing that back work might be a lot easier than they could ever imagine. And so I always recommend a cloud-based bookkeeping software. We're big fans of a software called Xero, Xero, QuickBooks Online, same competitors. My preference is Xero. QuickBooks Online is obviously one that everybody's heard of. But the beauty behind these softwares is that you can connect your bank account, your credit cards, everything to them, and it downloads all these transactions in there. So the date, the description of the transaction, the amount of the transaction, is all automatically downloaded into your accounting software. Literally, the only thing that needs to be done from a very basic bookkeeping standpoint is saying, what was it for? Was this income? Was this an office expense? Was this advertising? And just put it into its specific category that then will take it and create financial statements from that. So this idea of bookkeeping becomes a lot easier when all of that's coming in. I talked to so many people, and there was someone at the end of last year, and made me mad if we look back at that kind of really mind-boggling mistakes that somebody made in 2022. I had someone tell me that they were going into a QuickBooks file and looking at a bank statement on one side, QuickBooks file on the other side, and putting in the date, the description, the amount, the account it was in, and pressing enter. And doing this through all their bank accounts and all their credit cards. And I'm like, no wonder you waited this long to do your bookkeeping, because that sounds awful.
Awful.
That's
Yes.
what people did many years ago.
Oh my gosh. I was going to say,
Right.
yeah, people picture it as writing on a ledger, but it's not anymore. So who's doing that? Like, what industry did that person live in? What are
were
they doing?
advertising and marketing.
Oh my gosh. They have no excuse.
They're-
No excuse. That's what I needed to do.
Modern, yeah. Their
Yeah.
business
Oh my
is very
gosh,
modern.
yes.
I was
Yes,
anticipating
yes.
like an archaic thing, like,
Yeah,
like,
I was
don't
thinking
know.
nonprofit and, the scared of it, or
Yeah,
okay.
right, right.
Okay.
So that's the biggest thing. There's a software called Wave out there. Wave is a free online software. So like find a solution, just start to do that process. I always say do your bookkeeping at a minimum monthly basis.
Mhm.
Okay.
The other piece to that that's going to be super helpful is just making sure you have a separate business bank account and credit card. If you have that, now we know that when we're downloading those transactions into that accounting software, we know it's all business related. And it also saves you from an audit standpoint.
Allegedly, I can have the court reporter read, allegedly business related.
Correct. The one final piece that I say is super easy and something that if you don't do it at the beginning of the year, it's going to be a big task, but it's just keeping receipts. I always say, don't keep that grocery bag full of receipts or that box of receipts in the corner of your office.
Yeah.
You get a receipt, write on that receipt, what was the business purpose? Who were you with? If you were at dinner, what did you discuss? Whatever, just write directly on the receipt, take a picture of it, throw that receipt away and move on.
Yes.
There's a chance you'll never need to see that receipt again. But if you
Yeah.
do, it's in a digital file. You can easily
Yeah.
find it. You don't have receipts laying around.
Fire hazards just in the random pocket of your office. Yes.
Yes, yeah.
Awesome.
Okay. So speaking of the tools you're talking about, Mike, I know that my accountant uses QuickBooks. They just asked me to start using a receipt, tool. I don't know if it's Wave or something that do separately.
I use Evernote or Scannable.
Yes.
is
Yeah,
my Evernote.
exactly. So my question is there benefits you've seen by leveraging tools like Xero, where there may be more all-in-one or less all-in-one, or just even how to leverage the stronger tools?
Yeah. So as an example, I'm a big Xero fan and they have a software called HubDoc. And that HubDoc software is you have an app on your phone, take a picture of it, it reads that. And it stores it by the date. It stores it by the vendor. So if you ever want to say, okay, I need to see all my receipts for January of 2023, well, there's a folder for that. Or if you need to see all your receipts for
Sold.
Office Max,
Just send me the affiliate
Yes.
link now. Just
there's a
sold.
folder for that.
Awesome.
And the other cool thing is that a lot of those softwares, QuickBooks, Xero, HubDoc, all those different things, a lot of times those pictures that you upload can then be shot to the software
Right.
so that when that transaction, $32.10 at Walmart comes through the bank account,
Yes.
you can attach that receipt directly to it. And so now if the IRS comes knocking and they say, I need to see everything from this date period, can you provide all the proof? It's like, sure, here it is.
Yeah.
Yes.
It's easily done.
Awesome.
Awesome. What if a business owner just refuses, doesn't want to do it themselves? What are your suggestions when they hire a bookkeeper? Anything we need to know?
There's nothing wrong with hiring a bookkeeper or someone to do your bookkeeping. And that's
Mhm.
obviously what our sister firm focuses on and does. When you're looking for somebody to handle it for you, I think there's a couple key aspects of what are you looking for out of that? Bookkeeping is, to me, just creating financial statements. So coding all those transactions, creating a balance sheet, creating an income statement. Sometimes we need to go much deeper into that. So it's like, okay, now we have those financial statements. What do you do with them? Outside of being able to shoot them to your accountant for tax prep and filing, how can we utilize those financial statements more to help us in our business? We put a marketing campaign together in February. What did it do in March and April? And should we do that same marketing campaign? My biggest one is, I don't know how many times I've worked with clients that are paying for subscriptions that they haven't used for 3 years.
All
Yes.
the
Sure,
time.
it's like
Mhm.
$10, $20 here or there, but that adds up after 5 years of not utilizing that
Sure.
software. So there's a lot of things that we can do with bookkeeping.
Cool.
Mike, you said bookkeeping was number one. You said there was a second thing though.
Yeah. So the other one is tax planning. We always talk about when you hear this word tax, most people are thinking about right now, where we are today. We're talking to our accountant. We're worrying about 2022 right now because we need to file our tax returns. And so that's important. Filing our tax returns, that's all required by law. But the problem is right now, as we're sitting here working on our 2022, getting our documents over to our accountant, there's not much for saving taxes that we can do. Overall, kind of where we're at today, we have to bite the bullet, whatever that tax bill might be. And so I always want to encourage business owners to say, okay, instead of thinking about taxes as tax prep and filing, let's first think about tax planning. And I say tax planning season started 2 months ago. Tax planning season started in January because tax planning is something that we're doing all year long. And preferably we're doing earlier in the year, making sure we get things done. It's something that we do on a regular daily basis. As I kind of said, like anytime we swipe a credit card, there's a potential tax strategy involved with that. And so that's kind of this idea of tax plan that we try to implant is saying, let's start learning. And so everyone's like, great, I understand that tax planning is important, but I have no clue what to do. And I always say, start to find those resources, start learning. So if it's a podcast that you're listening to that happens to be our podcast, great. Like that's a great starting point to learning, but you can't stop there. Learning's one thing. And I fall victim to this. I listen to legal podcasts, marketing podcast, whatever it is. Oh, that's a really good idea. And then I go back to driving my car on the road. And it's like, okay, I didn't do anything about that and write it down and do anything. So it's learning and then implementing. And that implementation piece is probably the hardest piece to actually complete. But I hope some motivation for this idea is that if you hear about this idea of a home office, and let's say it saves you $1,000. If you do the home office this year, it saves you $1,000. If you do that next year, it saves you another $1,000. Think about where that leads you and where that business can go with that extra money over the course of time.
Sure.
So when we look at tax savings, it's not necessarily always about the dollar amount. It's something that we just want to continually add on to. It's not a one strategy and done. Like we're not just doing the home office, but now we have a home office. Well, guess what? We've just opened up the door to more mileage that we can take because we're no longer commuting as much as we were before because we go from a home office to another office. That's a deductible business trip. Whereas if we went from our home to an office, that's a commute. That's not deductible.
Right.
So how do we take a full, complete summary of tax strategies and things that we're implementing and really see the advantage from that?
Sure. Is there anything else like major change that happened for 2023? For instance, like in my practice, the increase of gifting went up $1,000. 2023, IRS allows up to $17,000 in gifting per year. So is there anything else major that's happening in 2023 that's now effective that would be helpful to the business owners out there?
I don't think I got a gift from you last
What?
year. So
Wait.
let's make sure I
Not
get
the
a gift.
16th? You understand? That wasn't the 16th? Oh, Mike didn't go either. Nobody got my $16,000 gift. You're telling me?
Nobody.
I need to fire that accountant I have. But speaking
I
of
don't
accountants
think
that are
that
robots,
change
by the
impacted really your practice at all, Matt, because like you kind of talked about earlier, all those numbers that the IRS changes every year go up with inflation. So if we look at the gifting, if we look at retirement amounts you can put to retirement, all of those numbers went up. Another big one to think about is the mileage rate. You know, the mileage rate is something that's constantly changing up and down. That's one of those things that doesn't necessarily always go up, but the mileage rate changed this year. And last year we had 2 mileage rates. This year we're back to 1. Hopefully we're back to 1. I don't know. Not through the year yet, so we don't know what gas prices are going to do. But it's just kind of being conscious of that. Same thing with Social Security cap as an example. Once you hit a certain amount in W-2 income, you pay Social Security taxes, which is 6.2%. 12.4 if you're self-employed and your employer as well. But you pay that up to a cap limit, and that limit is constantly changing. I think 3 years ago it was like 132,000 or somewhere around there. This year it's like 160,000. So that's another thing to think about if you're hitting that Social Security cap and how that impacts your taxes and things like that.
Is there a big difference, Mike, between, and it probably depends on the industry, a lot of circumstances, but a lot of people have asked me this question, and that is, do I just take the mileage or do I write off the entire car? In other words, the gas, all the other expenses, and just start running everything through the business?
Yeah.
What do you think?
Well, it depends. Actually, I'm just kidding. I didn't say that. There's going to be different scenarios of where it makes sense. And so if it's a high dollar car with low miles, obviously using actuals is probably going to be better.
Yeah.
If it's a low value car with high miles that you're putting on it, you know, probably doing mileage is going to make sense. So there's some kind of like blanket statements that you can do there.
Sure.
But at the end of the day, it also comes down to like, do you need a new truck in your business? Yes. Do I also need a big write-off this year? Maybe. And so then it might make sense like, okay, we're going to do actual. Even though if we look at this from 7 years from now, we would have been better off doing mileage over the course of 7 years.
Sure.
Saving a big amount in depreciation in year 1 is really going to impact us now. And we're going to use those savings to grow past whatever the mileage rate would have done over the course of time. So, you know, you have to just kind of use common sense and talk to your
Makes sense.
accountant. They're going to be able to tell you a little bit deeper on your specific scenario. We do have a podcast episode and a blog post that kind of talks about like, what might be some standard rule of thumbs.
Okay, so we've seen a big uptick in side hustlers. They get their own name now in the economy of creator or gig economy. We're all benefiting from that, that's for sure. Instacart is usually at my front door at least once a week, maybe twice. They just keep adding more and more stores that will deliver. There's so many places where people can make money. In fact, I asked my 5-year-old the other day, I said, hey, do you want to deliver food? Like, it wasn't a pizza delivery guy. He was firmly aware it was like Uber Eats. And he was like, oh, no, I think I'll have a different job. And I said, okay, what will your job be? Oh, I'll be downstairs in the office typing on the computer. Okay. Like, I was like, he had just met Canva that day and had been like typing out stuff that looked like it was an arcade game. But what's really incredible is how many more people have this type of language on the tip of their tongue. Because if they're not the side hustler right now, they know one finally. And I'm sure in some circles, it's still like, oh, yeah, well, they got that side job they think is going to go somewhere. They have that little podcast, right? Somebody's always downplaying something for others. But I think more and more, though, it's like, oh, and you do that too. I think, though, that's the case for all of us that provide services for business owners, entrepreneurs, for creators that are doing more and more in their business. Can you talk to me a little about how that's impacted your business, your day to day? And are you seeing those people flood to your podcast? What's happening?
Yeah, I think that's so important. And because it's this whole idea of the government actually incentivizes us to be business owners. And it's a good thing. And how do they incentivize it to us? They allow us to take deductions against our income for it.
Yeah.
If you're a W-2 employee, working for somebody else, you get your gross wages, you get taxes taken out. It doesn't matter what you've spent personally to help earn that income. So you might be working in a home office. You don't get any advantage to that. You might have went and bought this new chair for your home office to make you feel very good and, help out some of your back issues. You don't get any tax deduction for that. I don't want to say tax savings for small business owners because it's really those people that you kind of mentioned. You just have this small podcast. You just do this small side work. People think that I'm not a business owner. Well, in reality, you are. If you're earning a 1099, you're a business owner of some sort. You're self-employed in some capacity, even if it's not your main capacity. But the opportunity for potential tax savings is so big. Like you can take that income that you're receiving and the government will give you a deduction for items that you use to offset that home office that you have, the mileage that you're doing to do the work wherever you're working, technology that you're buying to help make it easier. Like it opens up the doors for so many different opportunities to expand and basically reduce that income that you don't have as a W-2 employee. So we're seeing a ton of that. Now, the problem and kind of the scary thing, and really what I'm trying to change is we're seeing a ton of that, but nobody's thinking of themselves as a business owner. No one's thinking of this idea of like, I'm too small to save taxes. That's the problem that we're trying to solve is saying, no, you're not too small. I don't care if you're making $3,000 a year in 1099 income.
Right.
You can offset that. There's likely a chance that you're not paying any income on that.
Wait, it's just, Mike, are you saying I don't have to be Warren Buffett or Jeff Bezos to take advantage of some of the same tax strategies of owning a business that they do? Is that what you're saying? That. Wow, that's awesome. That's great.
And I will caveat that by saying, that ultra wealthy, they have an open door of tax strategies that they don't make sense for others. Some tax strategies take investments, but the vast majority of tax strategies can be implemented at any income level.
Yeah.
Awesome.
So the ones that you want small business owners to definitely take advantage of today, you've already said home office, of course. Hiring their kids in their business. They might need to go back to the last episode. We talked about it a little bit more. What else did you say to us already?
This whole idea of maximizing deductions. And that's a very broad and a very deep conversation, but it's one area that I think people immediately stop at. This idea of maximizing deductions is saying, hey, we're doing a lot of spending, but now that we're a business owner, we can find a business purpose for that. If we're looking to hire our kids in our business, we're paying for things for our kids no matter what. But now we're getting a business deduction for it. They're potentially paying no income taxes on it. It's just taking some of these things that you do on a daily basis, but there's actually now a business purpose for it. Think of that spending you're already doing, finding out, can we shift that?
Yes.
It's like Amway, but for taxes. You know how Amway comes around? Okay. So home office, hiring the kiddos, just really critically looking at each spend. Is there a purpose? Now, certainly we're not asking you to do anything outside of anything legal. We're saying legal purposes here. What else do you want us to know for 2023 that you're like, don't call me on the 29th. I heard that earlier on. Don't call you on December 29th.
A big one is the S Corp. So, looking at your business, are you expecting a profit, say $50,000 or more? we might want to look at implementing an S corporation to help save on self-employment taxes. That's a big one that we're doing for a lot of people. Now, we don't want to rush into an S corporation. An S corporation
Yep.
is not going to make sense for everyone. If you're just starting your business, don't worry about rushing into that. But, I think Matt would appreciate this from an attorney standpoint too, is people come to us and say, like, when do we want to be an LLC? When do we want to do these types of things? And from a tax standpoint, I say start an LLC right away, because it allows you that when you're ready to go to an S corporation, it's an easy transition.
Easy.
But if you come to me and say, hey, Mike, it's June, I made $100,000 this year and it's going to double the rest of the year, and I'm running as a sole proprietorship, there's nothing that we can do up until this point, because you're
Right.
running as a sole proprietorship. I can't
Yes.
do an S corp election to help save you taxes there. If we start an LLC today, moving forward, we can utilize that strategy. Whereas if you came to me already with that LLC set up and said, hey, I'm doing really well this year, should we be doing an S corporation? I said, yeah, you should be an S corporation. Let's backdate it to January 1 and make sure that we're moving forward with it. So S corporation is a big one, has a lot of upsides and opportunities to save on self-employment taxes, a few negatives. You have to run payroll to yourself. You're become a W-2 employee of yourself, might limit some of the amount you want to put towards retirement. Maybe if you plan to max retirement, is a separate business tax return. So a little bit more complex when it comes to the tax filing, which is going to be a little bit more cost to your accountant. So some downsides to an S corporation. And that's why we typically say, like, wait to make that decision until your business has grown to, say, that $50,000 in profit or more on an annual basis.
So new business owner has an LLC, not an S corp. They come to you anytime that year, that next year, anytime that they feel like, okay, we're going to hit that threshold, that 50K in profit.
Yeah. S corp is just an election to file, an
Right.
election to be taxed. So we're not setting up an S corporation. We're just
Right.
taking an existing entity and electing to be taxed as an S corporation.
Right.
That has to be done within 2.5 months of the new year or whenever your election date is. But there's a little caveat to that. You can file a late election as long as you have a reason for it and the IRS will accept it. And we pretty much see the IRS always accepts the late elections. So yeah, someone can come to us at any point throughout the year and say, okay, we want to do that S corporation.
Yeah.
But the problem with that is that with the S corp, you have to pay yourself as a W-2 employee and hire yourself in your business. And it's not necessarily a downfall, but it takes time and effort and
layer.
everything else to set up the payroll software. So if you come to me December 29th, we can't get payroll set up. Sure, we can backdate it. No problem. I can backdate something today or last year. But did you run that requirement of payroll? That's the biggest key point, is that payroll has to be ran for the year.
Cool. Mike, you have to tell us, how are you doing all of the things? Doing it well. You look like you're eating. You still look healthy. I don't see a cough drop in your mouth at all times. So you're doing all the things and still living your life. How do you do it?
Well, I would first caveat this by saying I don't know if I'm doing it, and it's tough. I just say that for a standpoint of saying that, hey, even those people that you think are doing all sorts of things, doing everything well, that person probably doesn't really truly believe that they're necessarily doing everything well. And it's important to never compare yourself to other people, and just understand, as entrepreneurs and entrepreneurs that are in a lot of different items, we're all going through this. We're all struggling no matter what social media says. So just keep that in the back of your mind. One thing that is big on my side is delegation, finding that opportunity of, okay, what am I really good at? And what am I doing that maybe I'm not good at, or that somebody else can be more effective at? Or it's a task that if you put an hourly rate on your head, what's your hourly rate? Someone can do it for way less, and you can focus on some of those things that you're good at. And I think as an entrepreneur, this is extremely hard. It's hard to let go. It's hard to let somebody else do some of the things that maybe you're doing on a daily basis, but it's an absolute necessity. Once you come to realization for that, once you get out on that limb and start to do it, you're going to thank yourself down the road.
What do you have going on for 2023? What's happening with your business in 2023?
Yeah, we're continuing to kind of take this approach of just trying to find different channels to get more of our information out. Maybe a potential book. How can we wrap that into more of like a tool or roadmap? We're also in some development stages of some software pieces to help create this tax plan and this idea of, okay, what should I be doing in my business for tax planning, and having someone tell me that exactly for a reasonable price, easy to understand, things like that. So a lot of fun things for 2023.
Cool. Great. Well, tell us where everyone finds you. Where's the best place to find you and hang out with you?
Yeah. Best place to find me is taxsavingspodcast.com, where you can find our podcast on any podcasting platform. You can find everything that we have going on there. If you go to taxsavingspodcast.com/deductions, there's a good ebook on there about maximizing deductions, some things that you should be focused on. You can also join our email list. Every time we put a new episode out, every time we do a new blog post out, we send an email alerting of all those items.
Awesome.
Awesome. Thank you so much, Mike. I
Thanks,
really
Mike.
appreciate you being here on the show always.